Hello, everyone. I'm excited today to have this conversation with my good friend Terje Whitmore with Country Financial. Terje, welcome.
Thank you very much for having me today.
Absolutely. So today we're going to talk a little bit about homeowners insurance and what clients really need to understand and what questions that they should be asking their insurance agent or broker or carrier. But before we dive into that, why don't you just give us a little bit of background on yourself, if you don't mind?
Absolutely. Well, I am a Colorado native. I love Colorado, been here obviously all my life, and love what I do. I've been in with Country Financial for about 8 years now. I actually very much involved with the Colorado State Board of the National Association of Insurance and Financial Advisors. I've also been asked to sit at the $1 Million Roundtable for the last 2 years, which is the top 3% financial producers in the world. Very, very much involved with my clients' day-to-days and making sure that ultimately their lives and their futures are properly protected.
That's awesome. I love that. And yes, NAIFA, I've been a member of NAIFA in the past myself, and a great organization that I know you, a big lobby organization for your industry that I support as well. With that being said, I know you do a lot more than homeowners insurance, and you do more financial planning and asset management, property and casualty. But today, wanted to really dive into and focus on the homeowners insurance piece. And part of that is because all of our clients who have a mortgage obviously need homeowners insurance, and they should. But with that, I don't believe that most clients understand the different coverages and the needs of homeowners insurance. So why don't we just start out by tell me, outside of the replacement cost, right, and the replacement cost coverage, what other coverages do clients need to have and need to be looking at?
Absolutely. You know, when I'm working with a potential new client or with my clients, even sitting back down and reviewing their coverages, one of the first things that we go through is, what is your net worth? And why is that important, right? Very little insurance professionals ask this question from their clients, but that is probably one of the most important questions to think about. Now, your net worth, investments, retirement, savings, all that comes into play, including equity in that house. And why that's important is because, heaven forbid, if there is any major claim and somebody sues that person, well, what are they suing for? They're suing for that net worth of that person. So ultimately, the liability coverage that comes within your homeowner's policy should protect your total net worth. All right, so that's one of the first things that we talk about. Another piece is medical coverage. Medical coverage in homeowners actually protects everybody that does not live in that household. So friends and family that come over, the 5-year-old from down the street comes over and has a skateboard, whatever the case may be, right? So anybody that doesn't live within that household. Why is this important? Well, if you have a lot of people over for barbecue, family events, maybe you have kids yourself and the kids are always coming over to your house, it might be worth for you to take a look at your medical coverage. This is first dollar coverage. So if, heaven forbid, the kid does break a ankle or a leg falling down your stairs, that coverage is there first dollar with no deductible to make sure that they're patched up, or they're getting their cast, or they're getting taken care of immediately. We want to make sure that they're well protected as well on your behalf. The next coverage to think of beyond, obviously the dwelling coverage is personal property, right? Personal property is pretty simple, but got to think about some of those larger value items. What I mean by that is, if there's any one individual item like a jewelry, a firearm, paintings, any individual item that's worth $2,500 or more, they should actually schedule that item. And what that means is, you're basically just telling the insurance underwriter that this individual ring, no matter if it's in my house or it's on my hand while I'm in Italy and it gets lost, it's going to be covered correctly. All right. If you don't schedule items, quite possibly you could be undervaluing those items if there's a total loss. Right? An insurance company is not going to just give you $10,000 because you say there's a vase or you say there's a painting. So you have to actually schedule that item to make sure that it's properly protected and properly cared for.
That's
There's
great.
a
That's great. Now, let me pause you there real fast and ask a few questions.
sorry.
Yeah, no, you're good. So in regards to that schedule you're referring to for personal belongings or personal contents, is that something that high dollar item, I think you said $2,500 or more, does that need to be appraised and verified value?
Depending on the items, quite possibly, yes. In my case with Country Financial, if any item that's above $5,000 as individual items, we're going to ask for an appraisal.
Okay, but if I have an expensive mountain bike as an example, you know, being in Colorado, right, we love our outdoor activities with all of our gear. You know, a lot of people have expensive bikes or skis. Are those items specifically that in many cases could be well over $2,500? Do we need to keep receipts? Do we need to take pictures, or how do we schedule those things?
Great question, Gabe. You know, let's refer to that bike because I do have a lot of bike owners, you know, taking their bikes up to Breckenridge or whatever the case may be. Now, if that bike is $1,000, I actually still have them schedule it. And here's why, is because if you don't schedule it, it's not covered in Breckenridge, right? It's not covered while it's outside the house. All right. So no matter it's $1,000 or 25,000 or whatever the case may be, in that case, if that bike is traveling or that jewelry, that ring is traveling a lot, I'm probably going to request or encourage that client to schedule that item so that it's properly protected. Now,
Fantastic.
question, take pictures. Always take pictures. Walk through your entire house with your smartphone and take videos, pictures, every content that you can to make sure that your data, or I'm sorry, your personal property is properly going to be replaced if there's a full loss. And it's going to really help you in the long run to have that information on the cloud so that you can just basically pull it down if it needs to be.
Fantastic. And I interrupted you, but I think there was another bucket of coverages that you were going to speak to. I don't know if that was ALE or something else there.
Well, there's definitely a laundry list of coverages we could get into, you know, additional replacement, of course. There's auxiliary private structures. That's also a big conversation because a lot of Coloradans have the sheds and the barns in the backyard, a really nice fence. All of those are going to come within that auxiliary private structure pool of money. Now, usually that private structure pool of money is just 10% of your dwelling. Now, does that properly cover all of those items? A lot of times, no. You know, so it's good to also review that and make sure that the she shed in the backyard and the really nice 6-foot cedar fence is properly protected too, especially with the increase in costs of those materials.
Gotcha. And one of the last buckets I do want you to talk about before we have to wrap up here today is the additional living expense, or ALE, in regards to many people, again, who have been impacted through the Marshall fires at the end of 2021 are learning very quickly that 12 months of ALE just simply isn't enough coverage. So talk to me about what ALE is quickly, if you don't mind.
Well, actually, all insurance companies have actually realized that exact same fact. All right. And it's because of stuff like the Marshall fire, when all of a sudden there's thousands of people trying to get their homes rebuilt at one go. And all of a sudden, all the contractors in this area or that area aren't able to take care of and rebuild the homes as quickly as we want, of course, coming back to ALE, right? So I highly encourage you to always look at your ALE coverage. The standard is 12 months. Now, insurance companies are doing things to adjust that. For instance, Country Financial offers an unlimited package, meaning no matter if it's 12 months or 5 years, hopefully not 5 years, but you know what I mean, we're going to have that coverage in place for you. But we are very, very sensitive, again, around the case of the Marshall fire, because these clients are having a hard time and that coverage isn't going to last. So be proactive, work with your broker, your insurance professional, know your coverage and know your area. You know, if it's going to be a longer time to rebuild, be aware of that.
Yeah, that's great. So Terje, this has been awesome today. Again, I think at a high level, what I understand from you and from personal experience and knowing you is that there's a lot that goes into an insurance policy. And it's not just about the replacement cost, but there's all these additional coverages and buckets. There's extended coverage, which we didn't even talk about today. So bottom line is, don't just look at your replacement coverage and your annual premium. That's not how you compare insurance policies side by side. So if somebody wants to compare their policy and get a quote from you, what's the best way for them to reach you?
Best way to reach me is on my phone, 970-416-7795. You can always look me up online, Terje Whitmore with Country Financial. I'm all over social media, of course, and you can find me there.
Awesome. Thanks as always, Terje. Great to see you, and we'll talk to you soon.
Thank you very much for having me, Gabe.